Hello and welcome to another update video about ADA. The ADA chart is still in this potential descending wedge. Maybe it's coiling out for a breakout. It is at least moving below the descending trend line, just consolidating just below that descending trend line of this descending wedge pattern in the current wave 4 correction. I did post it earlier today on Discord and Telegram already. These wave 4 corrections, yeah, and for ADA, it's probably started on the 9th of December if my wave count is correct, but even if it started up here, it doesn't make a difference. But these wave 4 corrections, they are so boring. They are literally testing our patience. Let me just read what I posted in one of the updates earlier today. So it's obviously putting our patience to the test, mirroring the all too familiar drag of cryptocurrency chart corrections, especially the wave 4 structures, which are notoriously mundane and protracted, often concluding only when the collective boredom has reached its peak and most traders have disengaged. You know, and typically in a wave 2, people get scared, okay? So that's typically the purpose of a wave 2, which was down here, yeah? You see very sharp retracement, yeah? Whatever that was, like an 80% retracement or something. People get scared, okay? Because they think the bear is back. Well, in a wave 4 then, it's about boring. It's about boredom, yeah? People get bored, okay? It's just frustration. It takes a long time. It's not so much being scared. It's more like because it's so mundane. It's just moving sideways. And when most traders have disengaged, honestly, then it's starting to move, typically. So I'm watching for that potential because it's already taken now, when did it start? Yeah, a couple of months, really. Well, we also have to say, it now is a really healthy wave 4. It's a really healthy wave 4. I mean, yeah, one more low cannot be ruled out here, possibly to the trend line, the ascending trend line, or the lower Fibonacci levels at 44 cents or 39 cents that you know about if you watched previous videos. But really, what is very striking is that the wave 2, I think it took a couple of months. So if we just add a box here and measure sort of the length of that, the duration of that wave 2, and by the way, it finished down here in September and started in July, and just add it to the beginning of that wave 4, you see it's not quite there yet, but a wave 2 and a wave 4, they often have the same length, especially in crypto. It's not a rule, it's more a guideline. Sometimes the wave 1 initially is very, very small, tiny really, and the wave 2 then as well. And then I will not use it, that concept. But when the wave 1 and the wave 2, they have a decent size, and over time you will realize what sort of, you know, when you can use that concept. But it really looks as if the wave 4 might go for the same length as the wave 2. We're nearly there. I mean, it's really about, like, you know, tomorrow is the 7th. I mean, you know, plus minus a few days. It's basically there or thereabout, you know, we're nearly there. So wave 2 and 4 have basically the same length. That concept worked perfectly on the link chart, perfectly. I think with the accuracy of a few days, you know, and also that correction took a couple of months. So I think we're nearly done with this correction. It's the time to be watching for a low. Maybe it gives us one more low, but then I would really like to see the reversal either now or after one more low. We've got next support at 44 cents and then, yeah, 40.8 and then 39 cents. Also the ascending trend line, the lower boundary line of the ascending trend channel, they are all relevant in terms of support. Looking at targets for the next move up, which would be a fifth wave in either an ending diagonal in a wave 4, which would be bearish, or a leading diagonal in a wave 1, which would be bullish. Target is 85 to 96 cents. We will not really know if it's bearish or bullish until the subsequent retracement afterwards. So I'm going to give you a support area, and then we will try to judge along the way how the structure is looking. Is it more impulsive down? Is it more bullish? I'm leaning towards bullish because we're in a bullish market, but never say never. So I can really only point out the risk. Risk management, very important, but I'm leaning towards a bullish outcome. So basically a 1-2 setup. Also my portfolio would be happy about it. Okay, but of course we're unbiased here, right? Okay, so looking at the microstructure then, it seems reasonable that one more low is happen. So that expectation seems reasonable for one more low, because you can count that as a W, X, Y structure here, yeah, and the Y wave is an A, B, C. Now that B wave could still stretch out a little higher and then come down. I mean, that's all possible. But one more low, it seems like, you know, it's possible at least. Also because it slightly missed the 38.2 retracement in this pullback. Okay, maybe, and then I have to say, maybe my wave count is slightly off, and I should really measure from up there, because I think then it reached it. So, yeah, it did reach it. But then that doesn't make a difference because it entered our support zone anyway and spent a lot of time in it. You know, it started at 50.8 cents. So, okay, maybe it reached the 38.2 fib level. Maybe it's already turning around, but then I need some evidence. Okay, what would be evidence? First evidence would be a break above the descending wedges upper boundary line. And then I want to see a break above the last high, 53.7 cents. Then I can count 5 waves up in the yellow count. That would be another wave 1 of a smaller wave degree. Okay, so if it does this, then it would do the C wave of wave 5. 1, 2, 3, 4, and then A, B, C in wave 5. We call that a wave 1. Add the pullback zone for the wave 2, which would be here, and then breakout. That's sort of what I'd like to see, really. Let's see if we get it. So if we don't get it, as long as we don't have those 5 waves, from a perspective, you know, my perspective on this chart, I'm still then leaning towards another low, right? Because until I see 5 waves, I have absolutely no evidence. Yes, the breakout above the wedge would help, but then I need to see a break above that last high anyway, okay? And then, you know, that gives me 5 waves, and then, okay, we've got 5 waves up. Let's add another support area. And we will then probably have structural support around 48.7 cents, the previous wave 4 low, which is, by the way, a common target for a wave 2 pullback. And then here, down there at around 45.8 cents. What else to mention? Well, not much, just that typically, obviously, the first main target for a breakout of wedge pattern, you know, a main target after a successful breakout, that is typically the beginning of the wedge, and that's up there around 67.7 cents. But there will be other resistances along the way. That's my update about ADA. Hope you liked the update. If you did, please hit the like button, leave a comment and subscribe. And if you really like the content, then please check out the channel membership. Also, make sure that you follow us on Instagram and Twitter for additional content. Thanks a lot for watching. Bye-bye.